in the period from April to August, and that companies see the U.S. as more of a risk than a slowdown in China. Joining us now for more is James Lawn. He's the CEO of Polecat, and he's here in studio with us. James, welcome.
Thank you very much.
So tell us a little bit about how you're able to collect this data, what it is you guys do that isn't already available out there.
Sure. So Polecat's an international leading business intelligence company, and what we do is look at millions of pieces of content every day, ranging from online news all the way through to social media, Twitter and Facebook, and turn those that analysis into strategic business insights for senior business decision makers.
So your clients basically come to you as a way to know on an aggregate basis what the chatter is.
Absolutely.
And that way they can sort of use that information as they will.
Yes, and we do that real time, we do that in all languages, and we correlate it with structured data such as financial results, share price, reputation, to ensure that we're getting a full correlation of what's going on.
So just describe how that works. Is it an automated process, so you see how many times a company name is mentioned, or is it more of a manual process where you see what kind of shine there is around what people are saying about a particular issue?
Principally it's automated, though we do have some human element that sits on top of it. We look at key issues like the key topics that are coming up across those millions of pieces of content. We look at top countries that are being discussed. We look at top companies, top industries, and critically we also use within Polecat our financial risk management criteria to look at where there are concerns around financial risk management.
And so you've worked with, example, big oil companies, big banks who want to know what kind of reputational damage is being done as they're in the headlines. What we asked too is if you could take a look at, from an investing point of view, at some of the trends, some of the chatter around companies, and use that, almost turn that into an investment strategy. And so for the second quarter, for example, that earnings season just concluded.
Sure.
So you took a look at some of the chatter around all those names, and what have you found?
Well, I mean, the first thing to say is that in terms of the discussion around first quarter compared to second quarter, there's a 20% decline in positive indicators, and that's also correlated with looking at our financial risk management issues, a significant spike in terms of concern around future earnings potential. So not good news for Q3, as we probably know, although some aspiration for improvement in Q4.
And available capital, one concern, as you can see there, a top concern in fact.
Yeah, absolutely. So if we look at the financial risk management issues, then available capital is by far and large the biggest one, with financial distress coming in close behind it. And when we drill in deeper into that, we see macroeconomic effects, largely due to concerns around the Chinese economy, and also the euro crisis, but we also see significant concerns around banking availability and activity around M&A, and also specific discussion around Asia and China.
And the US.
Yeah, and if we break it down by country, I was just looking at the chart you've brought along, which shows the US and China are the top cited countries. How do we interpret that? Are they cited in a positive light or in a negative light?
Sure. So I mean, overall, as we say, there's a 20% decline in positivity between Q1 and Q2, an increase in financial risk management as well. Not surprising to see US at the top. We always would expect that. What is much more surprising is to see China up there in second position. That is a concern. That's about the Chinese economy. If we look at the Chinese content, then we see a lot about the failure of the equities market and concerns around earnings potential in China.
And now, just to spin it forward, what is it that I mean, what you could do, I guess, is eventually sort of offer investors on a real-time analytical tool or enough of a historical data set that they can then use this information in order to take a view going forward. But what sort of jumps out at you when you go through the data, aggregate it, and then try to identify what's going to happen in the third, fourth quarter and beyond? Sure.
So obviously it's not an exact science, but we've got some good indicators on that. I would say the most obvious issues are that Q3 is going to be very tricky, and certainly we see that in terms of the future discussions around earnings potential, with the aspiration for improvement in Q4. What we think is much more interesting is the impact of the oil and gas industry on the potential of other sectors to perform on their earnings. So in Meany Mine, we're looking now at an energy census to really understand that increasing impact of oil and gas industry on other sectors and their earnings potential.
James, do you have any evidence that can help us understand whether this analysis works?
Yeah, I think in the end, the beauty of what we do is it's about monitoring as well as looking into the future. So the way you can tell whether it works is by seeing whether what you predict is actually what happens. So we have past performance to demonstrate that our future predictions work.
Well, a reminder for everyone tweeting out there that you're being watched.
Okay, James, thanks for coming on, sharing with us. James Lawn, the CEO of Polcats.
And still to come on the program, as Deutsche Bank prepares to outline its